The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
There we go. Slow on the uptake. Gave him a curveball today. So what do we have going on today? Well, not much. Severe rout yesterday in a lot of these stocks, some minimal bounces today. When we look at the stocks, kind of a half-hearted bounce. But we'll talk more about this as the show goes on. Some of the other stocks we'll look at, see if anything's really changed. Red Hat had earnings. It's up $4.38. It was up almost to $14, almost $16 after hours last night at one point. So even the good news on that one's kind of been sold a bit. We'll watch that one today and talk about it a little bit. Other things of interest out here tend to be a lot of yapping. And, well, you know who's yapping.
You talk too much, you worry me to death. You talk too much, you even worry my pet. You just talk. You talk too much.
Yes, our Janet Yellen theme. Man, will we miss that when she goes. She was out saying on the one hand, but on the other hand, and on the third and fourth hands, and maybe a fifth hand, different things are going to happen. Very non-plussed. Her comments released before basically shouldn't change anybody's opinion about what they plan on doing. They plan on continuing talking about a rate hike in December. And the question is, she basically had a bunch of boilerplate that are the equivalent of your mileage may vary. Objects in the mirror may be smaller than you think. All the standard hyperbole of I don't know why you're saying anything. You basically are hedging every single one of your bets. So all you're doing is coming out and being a giant blowhard and waste of hot air. Why do you come out if you're not going to state anything? Well, I don't know. Why do that? Maybe because she gets paid? Wonder if she gets any paid for these appearances sometimes. Anyway, I'm not a big fan of just blowing to blow, but she certainly is, and there she blows. So anything else happening out here? Just kind of quiet. Tomorrow we're going to get the tax plan from the president and Congress. The rumors are basically saying that Mr. Ryan will whiff on getting the rates down low enough that the companies will actually bring any money back. The question is whether or not he's purposely sabotaging this. There's a lot of discussion about trying to drain the swamp, but you got about 7/8 of the people in the swamp. So what are you going to do? And of course, when you got the leaders of the majority in the House and the Senate basically collaborating with the swamp, it is a pretty tough thing to do to cut taxes. But we'll see. Orrin Hatch earlier today, market sold off a little bit, in that he was saying that he didn't think that there was a chance that the tax cuts would go through this year. Now, the question you have to ask is, okay, we get what everybody's been talking about, a 15% rate. All this money comes back over time. I'm sure it wouldn't be allowed to do it all in one giant felled swoop. So you're probably talking over 4 years or 5 years or 10 years or something. That's going to be an interesting part. The also thing is that the rumors are that Ryan's only going to do 25%, which would not be enough. And so one of the reasons why we kind of sold off very hard on those stocks like Apple, like NVIDIA, are all these companies that have a lot of cash overseas. Well, it's not coming back now. And so, mostly it was these companies that had huge cash overseas that got crunched yesterday. There were other specific things. A lot of bad news came in yesterday, and we saw the market sell off on that, at least especially the semiconductors and a lot of the tech stocks. Apple still not out of the woods yet. It's at 153.44, which is fairly close to probably where you'd want to pull the trigger again if you were shorting this thing. I just don't understand the idea of shorting $160 stock for $10. The risk reward to me is just insane. I want to short $160 stock and see it go to $120 or $100. I don't know. It just seems like you spend a lot of time chasing pennies while dollars are blowing down the street. So what do we have going on other than that? Well, like I said, a lot of hurry up and wait for tomorrow. In the meantime, literally, we continue with almost none in the way of worry in the market. Literally, these people can't imagine a market that ever pulled back ever again, and that's what's so scary to me. Even after yesterday, we didn't have a lot of people pile in short on the move down. They were all thinking they could buy it lower. They weren't thinking they were going to make money on the short side. And again, why we probably don't have much of a bounce today. Normally, you want to short when no one's interested in it because, of course, then when it drops, there's no natural buyers lower. You also probably want to cover when everybody else is shorting. And Jesse Livermore said that very eloquently in his book, where he said if severe pessimism suddenly develops, cover all your shorts and get out. Well, we do have just the other part of that, and that is a smacking euphoria at the highest rates that at the highest values the stocks have had in 120, it was 130 years. So we've got some massive valuations for these stocks. So your risk reward is pretty horrible for the upside. It's probably going higher 80% of the time, but you're fighting for 80% of the time for 5 points or 10 points higher and 80 points lower. And that's always got to be in your calculation is what if I'm wrong? And to me, even if the odds are fairly high, if the payout is low, your odds stink. And that's the way I've thought of this market. Some questions, you can always email me at path@tfnn.com. Question, do I still see that this market could hit 80 points lower this week? And I don't think it could hit that tomorrow if we do see something like 25 or 28% in the corporate tax rate coming out of the House. And they've done a lot of stupid things, so I'm not going to put it past them. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as always, we like to start off the show with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1580, Englishmen and seamen Francis Drake returns to Plymouth, England, in the Golden Hind. They named boats such horrible names back there. The Hind of what? And why is it golden? And why is it a hind? I hate that name. Couldn't it have been just Queen Elizabeth or anything else? I do digress. Becomes the first to sail around the world. On December 13th, 1577, Drake set out from England with 5 ships on a mission to raid Spanish holdings on the Pacific coast of the New World. Got into a storm, lost a couple of ships, got blown all the way into the Pacific, had to go all the way back around the world, and it was never planned that he was going around the world. Just kind of ended up that way. And you know what? He didn't fall off the edge. We all know about that edge. Anyway, first world man to go around the world. He expired and assumed room temperature in 1596 at the age of 56. People didn't live very long, especially the horrible food and conditions on the boat. But on this day in 1580, people start getting around. Of course, if it took more than 24 hours to get around the world today, not even 80 days. Just 2 or 3 days, people would be ticked. So we shall see. Someone says that we're not posting to the den because something went away and awry. Let's do this. So I can get this started back again. Okay, there we go. So you got to see the slide for a second. I don't know what happened to our connection and why everybody got bounced out but we are back. Anyway, that's about it. Not much going on. As I said, we're all waiting for what's going to happen tomorrow, so we'll take a look at some of these. First one I want to look at is Red Hat. That's about it. We don't have anything that's going to move this market the rest of the week for earnings. Red Hat, very interestingly, had been making a lot of deals with Microsoft. I wouldn't have been short going into this one because of that. They are working with Microsoft and Microsoft to be the primary push in the way of Linux going forward. Since I use it, .NET, the .NET framework for Microsoft, in the last couple of years, they've made a huge push to make sure that this works on Macintosh and on Linux machines. And this is like donating, I'm going to say, a couple $1 billion to Linux, because now you can actually write fairly decent programs with a high-level language that is going to be, doesn't change every 5 seconds. I do a lot of work with machine learning models in Python, and I have to tell you that I have to go back probably the early 90s to find something as painful. Everything you look at, there's no way to tell what version it came out of, which different versions of all the different packages work. There's no kind of manifest that says you need to put all these things together. Things have changed. It was basically a horse that was designed by committee. The one nice thing about the .NET framework, of course, is Microsoft had a couple of people that were basically guiding it along with one continuing idea about the way it should work. So it's not a horse as so much as something that had a 15 years of development already in it. So Microsoft worked out a deal with Red Hat to distribute it. Red Hat gets money back from Microsoft. Microsoft gets the ability to say, you know what, you can write a .NET program that will run on Windows, it'll run on Macintosh, it'll run on Linux, and it'll run, they've got some other operating system. Android, I think maybe it can even run on Android. I know that they had kind of a separate version that would run on Android, but I think they've got ones that will run on Android now, and even things like Raspberry Pi and others. This is the strategy for Microsoft of Windows everywhere, but just to give you an idea, being able to access all the documentation and books that have been developed for this, probably over the last 7 years, almost everything will work. And it works, like I said, just about on anywhere you go. Now, there's some things that you have to fine-tune for each operating system, but for the most part, you can sit down and write fairly standard line of business applications. So Red Hat's deal out here is basically what we've seen. There wasn't a lot of talk about how much Microsoft was throwing money Red Hat's way. Well, it ended up being quite a lot. And that looks like that will be, going forward, a great way for Microsoft not have to get into the weeds of Linux and all that stuff. They can continue developing Windows products and to let Red Hat handle the all the heavy lifting of supporting an operating system like this, and Microsoft's tooling for writing programs for it. But the idea is, of course, that everybody will write for Windows and then port it over to the various operating systems. And of course, you want to be the first in line, because those programs come out first. The ports take longer. Anyway, you can give me a call at 877-927-6648. Got to go to Victor in New Jersey. How you doing, Victor?
Good, good. Hey, check out this APPN. They make a free platform and software. Do they have any potential to be like the next Red Hat?
Well, they put Apple up here. Can you say the symbol again?
No, I said it's APPN. Apple
APPN, yeah. No, the engineer wrote down the wrong one. That's why I was going to try to. APPN. Find it for sure.
Yeah, tell me what you think of their platform and their product. It seems like it's it's sort of like a Red Hat thing that's taking over.
Okay.
It's an idea. Tell me if you think you know all this stuff.
Okay, let me look all this up just to make. Okay, this is Appian.
Yeah.
I don't know them well. provides low-level code software development platform that enables organizations to develop various applications in the United States and internationally. The company platform automates the creation of forms, data flows, records, reports, and other software elements that are needed to be manually coded or configured. The principal software includes markets for low-code development platforms.
It's a cheap platform, and everybody seems to be using it now. So I don't know, is there something there, or am I dreaming?
You know, Xamarin kind of is a huge part of that business. I have not heard of this company at all in any of the stuff that I read. Case management software, business process manager. Xamarin's kind of a wrapper around all the stuff that you can either do on Windows or Android. I don't think it's on iOS, but it may be. I just don't know. Let's hang on to this. I'm going to look at this company a little harder over the weekend, or not over the weekend, over the break, and then I'll come back and talk more about it.
Go to their website and tell me what you think. Yeah, thank you.
Yep, we'll look at it here. Okay. Be back in just a second, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the Appian people are not very good in anything other than saying that they provide low-code platforms, which can mean anything. Of course, you can't find it on the website. You've got to send your email to them, and then maybe they'll send you something, which means that you better not put your real phone number on there or you're going to get bugged. So I put it in there. Haven't seen anything yet. Maybe something comes before the end of the show. But low code kind of acronym for saying that they do a lot of things for you. And that's why I said that Microsoft and this deal with Red Hat is such a big deal, is because they use what they call the .NET framework, which literally does everything for you. And they've had that for, I started in 2001 or 2002. So I've been working with it for 15 years. If you're a big outfit like Facebook, you can throw 1,000 programmers at a problem because you've got 1 billion customers to amortize it against. If you've got 5,000 people that work for your corporation that may need, like a terminal at a rental car place, you may only have 2,000 or 500 or 1,000. It doesn't make a lot of sense to make a lot of specialized things because you only have a couple thousand people to amortize it over. You're more interested in getting it out, making sure it works good and it's solid. You do that by reuse of other people's software. And what these guys do basically is offer a lot of components that you can drop in there. They may not do exactly what you want, but since you don't have to hire 1,000 programmers, maybe you can get by with 5 or 10 or 15. Makes it useful for people providing software for low volume use in what they call line of business, i.e. you use it. You're not trying to sell an app on the iPhone. You're not trying to sell a package to somebody else. You are literally using the software for your own internal use on your system. Anyway, maybe these guys respond, maybe they don't. But that's basically the story on that company. As we get to the market, which is already in progress, we're at $24.99. Volume is interesting. I always like it when I check on some of these websites and they're not actually kicking out data. A lot of times we get some fairly big moves in the market when that happens. Yahoo's throwing out crap for quotes the last day and a half. So I start looking at that. Normally, you start seeing, the lack of them reporting volume and or bad quotes for stocks. I always wonder whether or not there's somebody not paying somebody off somewhere to actually do that for the retail home trader. Of course, you can always get that from your broker, but I mean, that's always the interesting part to me is why does it always happen at Yahoo and these other public data formats where you look at it and you go, well, that wasn't true at all. Why is this all messed up? And I always think that there's somebody years ago, you guys don't have to worry about it today, but in 2003 and 4, I had dedicated lines dropped into my house. And for ISDN, I actually had 4 ISDN lines at one time. And you would see quotes, 3-4 minutes behind the market. And sometimes you just lose them. I always wondered why, because my connection wasn't a problem. I always figured they paid some guy to just pull a cable out somewhere in New York so that the traders on the floor would have a severe advantage over the retail traders at home. We don't have that many retail traders anymore. Maybe that's one of the reasons why that doesn't happen as much anymore, or maybe the SEC is over these people for pulling those kind of stunts. It was a pervasive thing. That was also in 2001 and 2002. The broker-dealers were reporting volume, and sometimes they would count both both sides of the sale and sometimes only one side of the sale, make it look like there was volume to make it look like there wasn't volume. So that made me always think that volume was probably pretty important if they were willing to face fines to screw over other people by the reporting standards. Now, they would always just come out and say it was the old honest mistake, but it only happened at the right times. So you knew that they were kind of phony on it. Martian quotes, baby. Question, sailing stories. and really don't have that many. It's just the standard stuff. Go on out all the way out there to the Fortress off 73 miles west of Key West. Come back up the coast. Pretty standard stuff. We go on our very fast catamaran. It's no one exactly sure whether it's 55 feet or it's 60 feet or it's 52 feet. No, we haven't ever measured it. But since it's kind of like a no-name boat, although it was built well, kind of hard to tell. But nice big boat, very fast. And that's what you need down here in Florida to get out of the way. Okay, what else do we have? We're going to take a quick look at Apple. As long as we're close to the A's here in the marketplace, we're going to look at a few other stocks. Again, you can give me a call at 877-927-6648. And, of course, where's that? You can always give me a call. Larry Wyoming says on topic. Yep. VIX options record all-time highs as stock speculators risk record amounts on continued calm. And I always love that. There was, thanks for the information here. This is a zero hedge thing with Tyler Durden that shows basically record highs, and it basically matches what I do, which is look at the shares of individual equities every single day and look at them over time to give kind of heads up of when people are truly getting bearish. And it's easy to see in options. It's a little harder to see when they do it in the equity. You want to look on both sides. But we don't have anybody thinking the markets can go down at all, and that's generally when the trapdoor opens. And you know what? When everybody's kind of bearish, I don't like being that. But we'll see. Anyway, thanks for the article. I look at it, the shorts a little bit differently in that, as I said, I look at the short percentage each day on each stock, and then I build my own kind of model based on short interest in them. Anyway, Apple came right down to pretty much where everybody thought it should be. It filled this gap that started back on the 2nd of August. This came up on 70 million shares, came into it with 44 million shares yesterday. Of course, you get a bounce. Everybody has to buy Apple. Of course, volume kind of stinks on this today, though. 27 million shares after this thing has come down a straight $15. Again, I'm not a big fan of shorting Apple. I think there's stocks that have a lot more weakness. Should you expected kind of a bounce here? I think you should have, but I think that the energy off this high is more than the big run back up to the August 8th high. So at best, you're going to consolidate here for a little while. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Apple. So you had your bounce there, and of course, you always want to look at the main SWKS, which is Skyworks Solutions, who make, I think about 3 chips going to be. Not a bounce in that one. And of course, the other one is Avago AVGO, which is a combination of several others, including RF micro devices that all kind of got together and formed a kind of a bigger company. This one had, of course, bigger volume into yesterday's big low of July 6th. So you're going to get a retest on that. When you look at the energy off these highs, the energy actually got bigger. So the best you can hope for, or the best that I would hope for, let me put it that way, would be that you actually get some consolidation and this holds. Maybe you bounce a little bit, then pull back, and then the volume's lighter, and then that makes a bottom, but I can't see much in the way of that doing anything exciting. Where do we have there? Okay, and I got to pop that back up so I can watch it for volume out here. Actually, volume fairly decent. Probably the surprise today is the pop that was fairly strong for the dollar back over and up to 93. It's kind of sold off since then, about 92.80. Commodities, of course, not a whole lot going on there. Of course, we'll get numbers tonight. On crude, it's off about 33 cents. I think a great deal of that, of course, is Rocket Man. And we'll see if the little Rocket Man rattles the sabers a little bit more. Natural gas off about a penny. This is kind of where you want to be looking at natural gas. We were discussing this in the den earlier in the day. And, you know, if you want to hide a lot of crude, you just rent a bunch of big ships and have them go around in the Gulf at 3 knots so they don't burn much fuel. And you bring them back in when crude spikes. And that's done a lot, especially by the Mideast folks. They'll make sure that there is news and then drive the ships in there when the price is higher. But that's easy to do. Much harder, hide where natural gas goes. There's only a few places you can hide that much gas. It takes huge amounts of area to do it. You've got to have specialized facilities to do it. If you liquefy it, then you've got to keep it pressurized and cold. So a lot harder to figure out what happening in natural gas. But again, I kind of like the fact that they're smooshing it here a bit. And I haven't bought it yet. I keep looking for a good sign out here, some kind of washout to pick it up. Don't see much in that. Gold's off about $10 at 1302, so we don't have a great deal in that. Anyway, looking at the IWM, we're up against previous highs with no volume. 57 million shares on July 25th at 144.25. We've got to 145.15 today. We've got that with about 22 million shares so far today. So certainly at highs. Energy is about the same on the way up, on the way down. So we'll see. But generally, the last thing in bull markets that turns are the small caps. And to me, especially the thought of higher interest rates is one thing, but that cash will be actually harder to get, even with lower interest rates, makes me think that this one is going to be the one that actually gets hurt a great deal more when interest rates start going up. And, of course, with any kind of reduction in the balance sheet from the Fed, it just hasn't gotten to the small caps just yet. Everybody continues to be rather euphoric in the market, which is that. Again, you can give me an email at path@tfnn.com. You can give me a call, 877-927-6648. And we'll continue looking at some of these other ones. Thor Industries, THOR. This one went a little higher yesterday. Interesting move. You're looking for a 1.4 million shares. Yesterday, you only had a little less than 700,000. Today, 450,000. So you're seeing some breaks out here. Now on this one could easily get back to the $98 level, maybe even 96. I kind of like this setup here for a potential short. So keep an eye on this one. It's breaking to new highs, no energy, and you've got a nice gap that's never been really tested going back to June 6th of this year with 5 million shares. Came in, made a nice test with about 700,000 shares on August 18th and has done nothing but go up since then, but not enough juice in this one over the last few days. O'Reilly, some interesting action. So I wanted to see how this one looked. If you're looking for these automotive companies to take another beating, this is another huge and beautiful setup. Might be tomorrow when this thing gets in here. I'd like it to fill just a little bit more of this gap. The gap started on July the 5th, came down with almost 13 million shares. Tried it with 3 million shares on August 3rd. Tried it yesterday with 1.8 million shares. Opened a little higher. You could almost pull the trigger on this thing right now if you think this happens. What I really like about this thing is it came off the lows with some energy, off the July 10th low up to the August 3rd high, pulled back a little bit, and then no juice, literally off about 40% from this August 15th low to this high. So you've got kind of double confirmation. No juice on the way up from August 15th, a very low volume test of the huge gap down, and a lower test of the August 3rd high. So if you're thinking that the auto parts continue to stink, this would be very interesting, and you'd make that play for a test of the July 10th low at 170. So we'll see. Maybe it takes a couple of days. I've noticed a lot of these stocks are just kind of hanging around, and eventually, what do? They just kind of fall off the edge eventually, like the semis did yesterday. So what else do we see going on out here? 499, $24.99 on the S&P cash. Of course, after the huge beating yesterday, the drubbing, the self-immolation of the NASDAQ high flyers yesterday, we are up 18 points after being down, 65 yesterday. So you're getting about a third back. Question is whether or not you're getting that with any kind of juice. And so far, the volume is not all that exciting, at least to me, in that part of the business. Got an email asking me to look at the TLT, so we'll do that real quick. Is there anybody in the den? Doesn't look like anything's moved. Okay. TLT. You went and had huge volume and gave it up. No charts. Okay. Let's correct that during this break here. Be back in just a second.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks. This is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
And we're going to finish up the last couple of minutes. Of course, it's Tuesday. So we're going to have Tom O'Brien, and he'll have Andy Heck join him for a little bit. Then, of course, Andy Heck's 401th show. Is that what it is? So that'll be at 5 o'clock. So we go a little extra for you today on Tuesday. We'll hear a little bit more about what he thinks. I've sent him some stuff. Maybe he'll talk about it. And anything else really going on out here? Markets is kind of hovering right below the 2,500 level. Could we get a bounce tomorrow? Getting some questions. I think the answer is yes, but I think we've got to get below 20% on the corporate income tax rates for repatriated money. If it's 25% or 28%, as some of the rumors are floating around here, I think that's an instant fail. I think you're going to see half the Republicans extend a finger that you would not want to be shown to you in a certain way. And so we'll probably see that tomorrow, whether or not it's true or not. But I continue to see a lot of signs that we're getting some kind of weak-kneed approach to this. If the market does not see that big number, they will assume, and quite rightly, that no one's going to bring their cash back to get gorged by the government. And, of course, that means that that money won't be coming to shareholders. Even if it's spread off of a number of years, we probably need to see something south of 20. 15% is the starting point. We've got, of course, Orrin Hatch, a big man in the Senate, saying that he doesn't think this thing's going to be able to be done before next year. Unknown why they have to drag their feet that hard on this thing. They've known about it for 6 months. But if it does, I think the market's going to point their collective fingers, wag them, and empty their nostrils at those who do not come through on this one. I think they were willing to give them a mulligan on health care. Market, this is where they live. They are not going to be happy at all. I think you'll see it in the price of the stocks. In the meantime, sell when you can, not when you have to. We will see you here tomorrow. Same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.